Good afternoon, all. This is Marvin from StockMarketPlan.com with your stock market watch for June 7th, 2011. What you're looking in front of you again is the S&P 500 through the Spiders Trust symbol SPY. Okay, this is the ETF representing the S&P 500 that I've been using for quite some time to gauge the breadth of the market, of the stock market. So let's go ahead and dive right in. Now right now we're in the session for the 8th. Okay, today's Wednesday the 8th, and that's what you're seeing here. But I want to pay particular attention to the 7th and backwards. Okay, that was yesterday, Tuesday. The market continues to show bearish patterns of higher volume days, lower volume up days. Okay, as far as the down days just overwhelmingly being more active than the up days, the bounces. Okay, this, if you've been following this blog and cast, you know that this has been a concern of mine for some time. The only reason why I haven't moved into 100% cash is because I think we'll probably get a bounce right here. Okay, right in this trend line here. That was the low on March 16th. Okay, I think the market will start to see, especially its conversion here with the 200-day moving average. I think that'll be an ideal place where I see the price of the S&P 500 coming down, the spiders coming down and meeting here, and maybe basing out and going up. Another thing that I'm looking at that is of great concern, when I look at markets, I start to look for patterns, characteristics, and then what those patterns and characteristics represent, or how are they interpreted when the market is in a bear market or correction market like it is right now, or when it's in a bull market. What does it mean? Because the same pattern can mean something different in either one of those phases. And what I'm going to do is just zoom in right now through the intraday of yesterday. Okay, the 7th, this day right here, so you can see what I mean, and I'm going to pinpoint this pattern that I'm seeing, that it is very, very very commonly found in correction type environments like we are right now. Okay, here you have yesterday's session, right, the 7th of June, okay, Tuesday. Here's the open, okay, and we traded sideways, and I believe we gapped up. Okay, here's the pre-market, okay, on June 7th, okay, this is before the market opened. This area here is 9:30 is when the market actually opened, and you can see we traded higher during the overnight session, and we actually gapped up. Okay, we opened the market on a up fashion in green already. Okay, and as we moved throughout the day, the market just kind of stalled, didn't it? It just moved sideways, and then here is my concern, is what I call the late day breakdown. And in a bearish correctional type environment like we're in right now, this is the kind of action that you see. That again, all I try to do is like stack up the chips, right, one way or another, and looking at all the different patterns and figuring out what is overwhelming, and this is starting to become something that, okay, you gap up, you trade sideways, and then you sell off at the end of the day. This pattern right here is very, very bearish. I think as we get, I'll be looking for this as the market gets into the next few sessions here, just to see how this happens, and also notice the volume. Notice the volume here, okay, increasing at the end of the day as we give it all back. Okay, so that is something that I'm paying particular attention to. I think it'll be very telling going forward if this correction is going to turn into something more meaningful. Again, to recap, the only reason why I haven't moved all into cash is because back in the daily here, it's because, again, the 200-day moving average is right here, and this March 16th low, I think the market can find some support here. Now, a breakdown below this level here, that's what I'll revisit and say, you know what, do I need to be all in cash or not? I'm definitely not initiating new positions, stock positions. If I would have invested here in June 1st, June 2nd, when I said to go ahead and everything started to look more bearish, if anyone would have invested in 4 stocks back here in the second, when I basically moved into 25% stock and reduced the exposure, okay, right now their stock is down. Their positions are down. And this is why I pay particular attention to overall market breadth, because there's been many studies done that 3 out of 4 stocks will move in the general directions of the market. So this is why I do this cast, because somebody can be out there pumping a stock to you, and it could be a great stock. Okay. However, if the overall market breadth is like it has been, okay, in this area here, okay, turning down, all right, and finding new lows, okay, it doesn't matter what stock you're holding. 3 out of 4 stocks, 75% of your holdings will move in the general directions of the markets. If you don't believe me, just pick up any watch list, MSN, Yahoo, put a few stocks up there, and when you're down, just look at your watch list. When you're up, look at your watch list, and you'll see that 75 to 80%, sometimes even more, of those stocks will be trading in the direction of the overall market. So that's why I do this. That's why I do this analyzation of the overall market breadth and what stocks are doing. So if somebody came to me again with the best stock pick right now, and it was so, and I thought it was a great stock pick, great earnings, great sales, whatever, I probably still will not move into it. I think the market needs to test. This is what I call market being an uncharted waters here. I mean, because you go back and there's really nothing. There's no closes or opens in this area. It's like, flip a coin, and I don't like flipping coins when I invest money. So I think this 10-day moving average can start doing this. Number, okay, and then this 200 can keep coming this way, okay. Maybe we'll get some trade action here. What part of that tells me that I want to invest new dollars into a stock? Okay, it's none of it. Actually, not even a mutual fund. I think right now is whatever I have held, I've held 25%. I've reduced the exposure to 25% stocks. I think again we might get a little bounce, and again this is what I've been dealt as far as so far. So can this market go up 150, 200 points the next day? Absolutely. But again, we're only dealing with what we've got here from the 7th backwards, now the 8th. This is today's session right now live. So again, 25% stock in my mutual fund portfolios, IRAs, 401ks, and the such. And on individual stock names, nothing doing yet. And there's leadership breaking. There's a lot of leading stocks that are breaking down. That is also a characteristic of bear market developing. So we're going to have to see what this market wants to do. No man's land right now. Okay, nothing going on. So it definitely not buying anything right now. Just waiting for this thing to base out and maybe pop higher. It is a very wishy-washy market, and if you've been watching this cast that I've been doing here, you know that it's been like this. It's been just whips on these fakies, and then back down we go again. Okay, but the one thing that is constant, okay, is this up volume on lower days. Okay, volume increasing, volume increasing, volume increasing, volume increasing, okay, and then your bounces come in dismal volume. That is the one constant. It is I think if this market decides to turn a new leg down here, coming this way, breaking down the 200, I think that will be telling that, hey, look, it was there the whole time, and that's why we reduced exposure to stock. Again, this is Marvin from StockMarketPlan.com with your stock market watch for June 7th. I encourage you to visit the website. There's other videos there on the rest of the market as far as commodities, and just invite you to go there and comment if you have any questions on any of the stuff that I've discussed here today. Please go on there, comment. Check us out on Twitter, Stock Market Plan, and on Facebook under Stock Market Plan, 3 words. Okay, guys, have a great one. We'll check you out later. Thanks for watching. Bye-bye.